So today I'm here with Belinda Price of Essex Mortgage. She is a loan officer with them, and she's also my loan officer. So I wanted to talk about the pre-approval process with you, Belinda. So first off, the $1,000,000 question, what is a pre-approval?
All right, that is a great question. A pre-approval basically is your golden ticket to go shopping for a house.
Mm-hmm.
And you need one before you go shopping for a house unless you are paying cash.
Right.
So if you're looking to purchase a house and obtain a mortgage, you need to get a pre-approval.
Okay. I think from a real estate standpoint too, it makes it a lot easier for the agent to find you a house, because if you are out of your budget or if you don't qualify for the house, it can be devastating.
Yeah, absolutely. So a pre-approval letter, your loan officer will basically look at your income and your assets and decide, or put numbers together and decide on a loan amount or purchase price that fits you.
Okay. So I've applied for a pre-approval. I've applied for a mortgage loan. I received the pre-approval. Now I need to buy a new car.
Yes. Don't buy a new car.
Don't buy a new car.
During the process, there are some do's and don'ts.
Okay.
And we just basically call them the 10 commandments. When you're in the process of purchasing a home and obtaining a mortgage, you don't want to open any additional lines of credit. You don't want to run up your credit cards.
Right.
You just don't really want to kind of keep a boring financial status. So you're just making sure that you're paying all your bills on time, and you're not going out and buying that shiny new car, and you're not going to the Labor Day furniture specials and getting that 0% financing, because even though it's 0%, it's still adding a debt.
So what about after closing?
After closing, you can do what you want.
Go nuts.
Well, I would say, to set you up for successful home ownership,
right.
we're really looking at your entire budget. So if you are thinking about buying a car after you purchase your home, you should talk to your loan officer about that too, because it might decide on maybe a little lower purchase price, because at the end of the day, you want to be able to afford the new car and also your home.
Right. So say I got a pre-approval for $300,000. Does that mean that I have to buy a $300,000 house?
No. That just really means most loan officers will give you like the top of the budget and work with you as to what you want the monthly house payment to be, where it's comfortable for you.
Right. Now, interest rates are the big thing right now.
Yeah.
So what's your take on people who are flustered about these higher interest rates right now?
Higher interest rates. Well, I've been in the mortgage business for a long time. So I've seen interest rates, at 11%.
Wow.
I've seen rates go all the way down to 2.5%, but it's really all relative. So depending on your situation, yes, I mean, a year ago, you could buy a little bit more house within your budget because the interest rates were a little bit lower. But really all that means is that you're paying a little bit more. So maybe your budget, went from $350,000 down to $300,000.
Okay.
But you're still gaining. It's all relative, because you're gaining the equity. The equity growth in the home is growing faster than what it was 2 years ago when the rates were lower.
And I think equity is a big part of purchasing a home, because, I just hear it a lot. Purchasing real estate in general can create generational wealth, and you can have that equity for anything that comes up in the future, or even if you decide to sell it, make some money off of it.
Exactly.
So equity is a big thing, right?
It is. It is.
Let's talk about some of these myths that I need a 720 credit score, 20% down payment.
Yeah. So they are myths. So if you have a 720 credit score, that's awesome. You are probably going to get the benefits of the best of the best, right? So the best interest rates, the lowest cost of financing. But if you have a 620 credit score, that doesn't mean that you can't buy a house. That just means that you're going to have a different program. So most programs are designed, like a conventional program, are designed for home buyers with like a 620 credit score all the way up to 800 plus.
Okay.
Your FHA loan and most government loans, FHA and VA, are designed to assist home buyers that maybe have a little bruised credit. So you might have a 580 credit score, and we can still look at getting you financing for that. It's just there's going to be just different terms.
Okay, so underwriting, that's like one of the last steps for closing. Now, what is underwriting? What's the difference between underwriting and pre-approval process?
Okay, well, I mean, that's really good question, because a pre-qualification is what you would have before your file goes to an underwriter. So a pre-qualification is what your loan officer is going to provide you with. And that's their review of all your income and asset documentation. And most of the time it's going through an upfront underwriting process that's automated. So it's a computer system. Okay, so we enter in all your information, and whatever we put in there, it spits us back out a decision. Okay, and we call it an automated underwriting decision. Most of the time, if you have accurate information and you're putting that into the system accurately, it's going to give you an accurate decision back. And then the loan officer can give you a pre-qualification letter, or if you do it the full way and you say you bring to me all of your documentation, you have your income, your asset documentation, we submit it into an automated underwriting, and then we also submit it to an underwriter, an actual live person, then what they'll do is they'll underwrite on a to be determined property. And then they'll give us an answer, which is really the golden ticket for real estate agents. Love when their buyers have a true pre-approval.
So pre-qualification.
Exactly. So a pre-approval letter coming from an underwriter and a loan officer is really almost like a guarantee.
Now, would you say that helps in your offer when you place an offer on a home, having a pre-approval versus a pre-qualification?
Absolutely. It's almost equivalent to having a cash offer, because it's a commitment letter from the underwriter saying that yes, based on your income and your assets, based on all these qualifications that they would look at anyway, once you went under contract, we're going to lend with this, on those terms. Okay.
So when I started my process, I initially got a pre-approval from a different lender, and I spoke with you and I got a completely different result. Now, why is that? Is there a reason for that, or?
Yeah, I mean, so Essex is what we call an agency direct lender. So we don't have any overlays or special rules in between the investor and the consumer.
Okay.
So some banks and lending institutions their investors have just different criteria.
Okay.
So you might go to a different mortgage company and have an approval based on their additional criteria, where we don't have that. So there's we call them overlays. So there's no overlays in between.
All right. So as a mortgage lender and someone who's been in this business for a long time, do you recommend getting more than one, or speaking to more than one loan officer?
Sure. I mean, I think it's always good to have a second opinion.
Right.
I mean, if you were going to the doctor and you were having a procedure done, right? You would get a second opinion. So, I mean, I would encourage to get a second opinion and ask a lot of questions.
Right. Pre-approval process, what is some information that I am going to need to get together for you as the loan officer?
I would talk about maybe getting documentation in order, have your credit. You can pull a credit report one time free per year. So I would be proactive and pull out your documentation. Get your W-2s and your taxes and all those forms together, because you're going to need them if you want to get an accurate pre-approval letter.
Right.